Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is May 19th, 2013 edition of Market Outlook. Well, we certainly have a historic market. As an old time commodity trader and watching the silver market unfold in 1979 and 1980, I'm never surprised to see amazing price action and record breaking and unusual results relative to the norm. And certainly, this has not been anything normal whatsoever. So let's get into it right away. Please be sure to sign up for this newsletter at www.marketgauge.com, and you'll get it free every week. For our premium services, you can also go to the website. We have a number of options, including educational and trading services. So, let's take a look at the monthly chart here. We focused on this last week. We said that we were overbought on the RSI on a monthly basis, but that these things can persist for long periods of time, especially when you're looking at it, on a monthly basis. So here we have it. You can see we hit about 99. We also hit the top of the trend line, top of this really channel line right here, but market is extremely strong. Again, a retracement of even 2, 3, 5, or 6% would be nothing. It wouldn't even violate the upward penetration of this channel line right over here. So we're really in gear. Things are accelerating. The fundamentals are well in place. Let's take a look. You can see on the daily chart, not quite as overbought on the daily basis. Let's take a look. You can see we're just, after that inside day and options expiration on Friday, digested it very well, up almost another full percent. The market is still in gear. Although on a short-term basis, a violation of the lows of Thursday would definitely put a little bit of a crimp into this market and probably call into a test of this 160 level or so, maybe 162. So you can have a decent sized correction, but meanwhile on a very short-term basis, breaking of the low of the inside day from Thursday would be a critical level. So let's zoom in on that and make sure we're clear, right? So this particular day right here would be a important shift here in the short-term sentiment. Let's take a look at some of the market internals. Well, you can see our intermediate term trend indicator, McClellan oscillator, got overbought, has been working itself to the downside, but at the same time the market's going up. This is not uncommon in a really strong market. You absolutely need price action to confirm any of the market internals, sentiment readings, anything like that. Price action rules. Is it good to have a cautionary note? Absolutely. Should you be peeling off profits on your long positions? Maybe lightening up would not be such a bad thing to do. On a shorter term basis, the 10-day advanced decline right here, you can see pretty overbought. Even as we're going up, the advanced decline data is showing some deterioration, but still really, really strong. We're basically sitting above the critical reference point here on the up-down volume. So advanced declines, up-down volume, which is more of a shorter-term indicator, a couple days out to a week or more. Still extremely positive, but running rich. As you can see, we're at these overbought levels. But we both look for a confirmed move under the 2000 level in the advanced declines and under the 60 level in the up-down volume ratio to happen within a few days of each other. Neither has occurred. So that is still in gear. Now let's take a look at TLTs. These are the bonds. You can see we sort of crashed through the 200-day moving average and the 50. This now puts us in a bearish phase. So overall, we're looking to sell rallies. This is definitely very interesting because even as the market is moving up and rates are moving up, this is an extremely positive sign as the market seems to be able to sustain the weaning off of continually or perpetually lower interest rates. So you can see we're definitely getting a series of lower highs here. Let's put this in. See, we broke out from the trend line over here, took out that 200-day, but it was declining, right? This is, definite physics playing out on the market, right? As this market, it's deteriorating down here. It's on that 200-day moving average. It finally busted through and did it with a vengeance. So this move to new highs in the market as the bonds are definitely feeling some pressure, and rates have definitely showing signs of peaking in terms of its price and in terms of its low yield. Okay, let's take a look at some sentiment indicators. This is the VIX. Interestingly, again, overall, not irrational exuberance. We had basically held pretty much at the lower end of its trading range, but still not irrational exuberance, not touching the bottom of the Bollinger Band, but scraping near it. But overall sentiment, you can see definitely positive. We're under the 50-day, under the 200. The 50's under the 200. We're not nearly overbought or oversold, so things are in gear over there. Let's take a look at gold. Gold. See, from last week we mentioned that the market trend is down unless it took out that critical 145 or 144 level, which it never did. So we participated and been short this market. It looks like it's really oversold, but again, until we get some confirming price action, we are holding on to short positions and looking to take advantage of additional weakness. Let's see what happens this Monday. Meanwhile, certainly you can see we're at 0.4 on the relative strength index. However, price action is more important. We closed on the lows. This is looking extremely weak as the stock market goes up. Really no reason to hold gold. TLTs, our bonds, that higher rates, not good for holding gold. Let's take a look. You can see on the monthly chart, we were talking about the long-term trend in gold, and you can see, right, also on a monthly basis, we're at 2 on the RSI, which is the lowest it's been for years. So also lots of pressure over there. All right, one calculation, again, the GLD contract got up to about just in terms of actual numbers, about 185. So you divide that in half, that's your 50% correction. So you're looking in, under extreme pressure, really almost a correction just into this level right here, which is even below the critical 80-month moving average, which really coincides. Looks like there's pretty major support right around this 95 level or so, a little bit higher, or just call it around 100. So if we don't find support against the recent lows, you're really looking at a potential move really down to 115, and then down to the 100 level, and give or take a little friction around that. So going back to oil, OIH, oil service holders, we're talking about, you can see this pattern playing out. We picked this up last week, some pretty good price action on Friday, up 1.77%. This does look like it's poised and ready to move. Another note, let's take a look at some of the things I mentioned in the text version. You can see First Solar, we had a tremendous move up all in one day. This is the dangers of short covering. We're sort of coiling here. We want to watch that hold the 10-day moving average and potentially see another leg up. On the other hand, it is running extremely rich here. We did have a pretty good size move. So we had this inside day. I would be a follower either way, depending on your time frame. Short-term traders can definitely take advantage of a breakout either way on First Solar. One final thing, let's take a look at Tesla. Again, dangers of playing shorts unless you really know what you're doing and are quick to cover. Here's a stock that moved from 35, 36 all the way up to the mid 90s, and looking like it still has more room to go. So overall, this is a stock that's on the move, headed by an entrepreneur that is virtually unstoppable, Elon Musk. Obviously, controlling risk up in here is virtually impossible. I would like to look at this as a potential, if we can get some sort of correction here, and look for another opportunity to get in. Just want to point out that, sticking to your game plan, making sure you have stops is absolutely critical. And in this market, anything with a massive short interest is quite dangerous. So that's it for now. See you next week, and have a great rest of the weekend.